You could miss out on the Affordable Care Act. Uh-oh. Hi, I'm Joey Giangola with Giangola Insurance, and on this week's health insurance break, we're going to see if you miss out on the Affordable Care Act. So we are less than 3 months away from the big show. You know, that one where everyone in the country is supposed to be able to buy affordable health insurance? However, the only problem is, depending upon how much money you make, you might miss out. Of course, that big show that I am talking about is the grand opening of Ohio's health insurance marketplaces, starting here on October 1st. If you make just a little bit too much money, or you make just not enough, or a little bit too much, or we'll get through it. Depending on how much money you make, you may find yourself in a bit of a sticky situation financially come 2014. Are you going to miss out? Here's the deal. People just above and below those income requirements outlined by the federal government to qualify for tax credits and subsidies to offset the cost of their health insurance through these marketplaces are going to really be hurting the most. I've outlined some rough estimates for you on these income ranges based upon family size. You can take a look at really quickly right here. If you fall into one of these categories, then you're going to be able to qualify for those tax credits and subsidies, and thus you will avoid falling into one of these gaps. You're going to want to pay attention to the lowest number on this scale, that is the $11,615, and the highest, the $95,500. If you are above or below here, well, then you're going to want to pay a little bit more attention moving forward. So again, if you have a family of four and you do make just over that $95,000, somewhere, around $100,000 for your family, you are not going to qualify for tax credits or subsidies. Now, I'm not suggesting here that $100,000 is nothing to sneeze at and you shouldn't be able to live a comfortable life on that. Quite the contrary. However, with health insurance rates expected to increase around 88% for individual and family coverage, well, that's going to be a little bit difficult, we'll say, for you to make up that cost. And just on the other side of the spectrum, if you are just under, well, then we've got a nice little list of problems to identify for you as well. It's possible that you'd make too much money to qualify for Medicaid, but do not make enough money to qualify for a tax credit or subsidy inside the marketplace. Yikes. Now, I'm not going to claim to know the economics of the whole Medicaid expansion and whether or not it is a financially sound idea for the state. I have read it both ways, where some people say that it will pay for itself within a few years, and I've heard others say that this is going to leave Ohio holding a pretty heavy bag when the federal government's all done with this. However, putting the dollars and the cents aside from it, just looking at from a rational, logical, just plain old common sense point of view, when you completely restructure how, when, and where people buy health insurance, you can't expect this to not be addressed. This problem was created when the Supreme Court ruled last year that the states were the sole decider on whether or not they would expand Medicaid. But again, I thought, like a bunch of Supreme Court justices, like super lawyers, would be smarter than that. Let's take a minute just to look on the bright side and not completely depress you here. It's likely that with new, younger, healthier people paying into the system, or they're limiting for rating or amount you can charge to somebody, for those people who are rounding the turn into their golden years, it's possible that you might see a little rate relief next year. Whoa. Please don't take this as a guarantee that you will save money next year. It's simply to say that if everything works the way that it should, you have the potential to. But what if you're young, healthy, and loving life, really? You may not fall into a income gap per se. However, you will be hazed by Obamacare like you were a freshman in high school all over again. So get ready to climb out of that locker you were stuffed in, or dry your hair off from the toilet you were just dunked. If you are a 20 or early 30s something who has done fairly well for yourself out of the gate, and you happen to be self-employed, you're going to also find yourself in a uniquely challenging position. If you fail to qualify for assistance, or possibly even if you don't, you're still going to see one of the largest increases across any age demographic. Well, how do you soften your fall through one of these gaps? Bronze is basically going to be your favorite color moving forward. That's because that is the lowest metal or coverage offered through the marketplace. Now, of course, if you're not qualifying for these credits, you're probably not applying through the marketplace anyways, but just for simplicity's sake, we're going to go with it. This is going to be the level where you're going to find your new best health insurance friend, and they're called the health savings account. I've talked about them tirelessly in this channel, and you're going to have a hard time finding me making a case against them. Just know that that's going to be what you're going to want to look for. What's the bottom line? Well, some of these problems don't have great solutions yet anyways. Unfortunately, it's going to take a little time for these best solutions to kind of identify themselves. while we really kind of watch this new system come to life or really unfold. Really what you're going to want to do is you're just going to want to be aware of the potential problems that you could face next year and how you may or may not go about solving them, giving yourself as much time as possible. We might be asking yourself, what's the best way to do that? Well, outside of watching videos like these and reading blog posts on jingolainsurance.com, you can go ahead and download our very own free guide on how to understand Ohio's health insurance marketplace. It's going to identify these potential problems for you, answer all the questions that you have, and give you basically the best information that is out there right now. So please feel free, click on through to that. There is a link in the video's description for you to do that. I would highly encourage that you do. So again, I want to thank you guys for taking the time to watch this video. Definitely appreciate your time to understand something that isn't always necessarily fun. If you liked it just enough, feel free. There's a little like button. If you want to click it, I'm not going to tell you have to, but if you feel compelled, I wouldn't turn it down. But thank you. So make sure you stop on back next Monday for your health insurance break, because we'll be back talking about something else health insurance related that you are probably going to want to know. If you don't want to have to worry about coming back to this channel or finding this again, well, there's a little thing called the subscribe button. You can go ahead and click it, and it's going to just send these right to you as soon as they're uploaded, plus a ton of other stuff that you're going to love insurance related. If you love insurance, even if you don't love it, you're going to need it. So you might as well do it anyways. So go ahead, subscribe, and I'll be hopefully seeing a little bit more of you. But again, I am Joey Jingola with Jingola Insurance Agency. Take it easy, everyone. Splat. That's the sound of you falling through a gap created by the Affordable Care Act.